Hello, this is Running Robert, and today we're going to be talking about the Protalix BioTherapeutics PLX first quarter 2025 summary. Today is the 12th of May 2025, and in this, we're going to look at the bullish and the bearish parts of the quarterly report they just put out. So, I generally follow small cap pharma. I do games, I do a little bit of everything. So, if you like what I'm doing, hey, please like and subscribe. It helps a lot, and thank you. Disclaimer is I currently have a position originally, which I bought slightly under $1. I did buy some 250 options on that downturn, but I will probably be adding more shares shortly. I'm an amateur investor, and any advice given should be followed up by own due diligence, and information given is valid for today, the 12th of May, and the slideshow will not be updated, but as we get new news, new slideshows. So, let's just get right into the report. So, the company revenue was 10 million, which was below the fourth quarter revenue of 18 million. So, a big miss there. But when you're looking at it, we had 7 million from Pfizer, that's up from a million, 3 million from Brazil, which is up from 2 million, and nothing from our other partner. So that is really why we missed, and that sucks. And then that's why the stock dropped heavily on it. Cash at the end of the quarter was 34.6 million, and that's really no change from 34.8. They used $200,000 for this quarter. At that point, you can run this company forever. PRX 115, the phase 2 is going to start in the second half of 2025, so we expect data first half 2027. Cost of goods was the real hurt here. It's 8.1 million, R&D was 3.5, admin 2.6, and of course, the R&D is going to increase in the second half of 2025 for the new drug. So let's just take the elephant in the room here. Sales from, I think it's Chessie. We didn't have any. And the market dropped because of that. So now let's look at some past. Now in 2024, we got $23.9 million of revenue. If we divide that by what is sold, it's $195 million. That is 40% better than 2023, in which we got $17.5 million and got $116 million. So they have a $200 million drug here, minimum. We will see sales. There's not going to be any reason to abandon it. Like at that point, for 30 million, they made 165 million in revenue. Like that's a good deal. I don't think it's going to hurt. I think sales are coming, which is why I think this is an overreaction. Now, let's go to the second quarter. If we don't see any sales or any mentions on the report, we're definitely at that point going to have to revise what we're thinking about. But based on the numbers, I don't see them just abandoning the drug for no reason. But Pfizer and Brazil, they combined for a total of almost 10 million in quarter one. Now, this is a high number because in all of 2024, they only combined for 23 million. So, yeah, that's a number that is not going to stay as high, I believe. It'd be great if it did, but it looks positive. Unsure will keep it. However, the second quarter sales are already looking good for this, and that's what was reported in the events, and that's what we'll talk about next. So the company has recorded $2.8 million from Pfizer, 1.9 from Brazil since the end of the quarter. That is 4.7 million. So if they combine for almost 10, and this is pretty much the exact halfway part of the quarter, 4.7 means that we're pretty close to that. The company also sold 1.4 million shares for a gross of $4.1 million since the end of the quarter. And then, of course, their partner is looking to reduce the dose frequency, and it's under review by the EMA in fourth quarter. That is only going to help sales and trying to get it to the market. So I can only see that as positive. Going to the clinical assets of PRX 115, very positive. I am fairly bullish on this drug because one, the drug had a dose suspend response, which means that more drug you run, the more change to uric acid. Why is that important? The drug reduces uric acid, which is what causes gout. So this is one of those things that you are targeting the exact thing that is causing the disease. That is something that is it's going to be a positive result. We know that. It's just, will it be positive enough for them to continue against the other drugs? And then safety was acceptable, so no issues there. So of course, phase 2 is starting in the second half of 2025. And this is probably like even if, the current drug does not get off the market or get off the ground, like this drug has a good potential to bring in some major sales in 3 to 5 years when it's actually approved. So that was a rough quarter. There's no way to sugarcoat it. Overall total operating expenses minus cost of goods, which I just can't tell at the beginning, is about 6 million. So even without sales, the money we've already gotten this quarter should hold the company fairly equal, and that's 4.7 of sales, 4.1 of stock. That is 8.8 million. Your overall total operating cost is 6 million minus cost of goods. So at worst case, maybe you're a little behind, but you're in pretty good shape for this next quarter. The market definitely did not like this miss, though. If you have a drug that's selling 200 million a year, again, it's not like they're just gonna be like, you know what, we're done, we're good. Like this is not enough. Like get maybe a couple years down the line and it's 200 million, then we might have to revisit it. But on the second year, I don't see them stopping marketing the drug or anything like that. We have to look at it maybe more the environmental conditions, as in like end of quarters and insurance and stuff like that, might have been a contributing factor, or they might have just bulked up at the end of the last year. So again, based on all this, I believe it's an overreaction. I like the price. I want to be able to buy more. And so that is where I am going to leave you. So thank you very much for watching and listening, and I hope you have a wonderful day.